Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, September 27th, 2018. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES right now. What you'll notice is we are currently on a counter-trend pullback within the current overall uptrending market. You'll notice also that I have marked here the FOMC key level from yesterday's Fed meeting. We have now the FOMC from September 26th marked as 29.27.5. That is now the key level here moving forward for that meeting. And typically speaking, what you'll notice is price will either take that level, immediately bid or offered, and get a move in that initial direction. And then you'll see usually a follow-up retest of that move, of that initial level after that move. So for example, we're taking it offered now. We may see a little bit more weakness, but at some point when we see rejection, we tend to come right back to that level. Take for over here, for example, initially price went bid away from that level, and eventually after rejection comes back to retest that level. Same thing here in FOMC key level from June. Initially takes it offered. When it can't go down anymore, it comes right back to the level and then holds as support before continuing higher. That's the typical path, but it doesn't always necessarily mean it happens. Here is one from May. This is one where price took it offered, but then turned around to retest it and went through it immediately before continuing higher. That is a scenario that could happen here as well, wherein price would come down, find some sort of rejection, and eventually power through and continue higher. Again, this market has been a little bit overdone to the upside ever since we've gotten above the January high, and we have now held above that high a good 4 weeks or so, and have really been unable to continue to really push beyond that high. We've had a new high here that was pushed back, then a new high here, and now we're back below again. So again, at some point here we need to see price really make a move. Otherwise we could be stuck in this 29.50 to 28.65 zone, and eventually a breakout from there will lead to the next big move. A failure to hold 28.65 overall could lead to quite the pullback ahead. So again, that remains the big level. At this time, any pullback into that zone could still be a buying opportunity in the near term, which means we could see that level soon. Again, if prices cannot reclaim those levels back above 29.20. Okay, that's a little bit about the FOMC, a little prolonged look at that. If you take a look here at the NQ, you'll notice that this market right here is showing signs of rejection. I keep mentioning before that this thing here looks poised for more upside price discovery. However, what we see also is that there has been continued rejections around the 76.30 level. 76.40 is the level I keep mentioning that we need to really get beyond, and we did in the previous session, but rejected back below it. And now we're seeing price approach the midpoint of that rejection day. And so right now bears are going to be very eager to keep the 22 to 23 zone very, very well, keep it as resistant, keep it offered, because they have a rooting interest right now to keep this zone offered, especially after rejection, for a shot at maybe a meltdown ahead. They're looking for a disaster scenario heading into October. But here's where things get really bullish. If price pushes through, say, the 76.25s and can maintain acceptance above that zone today, that would be significant for a squeeze ahead. So that's going to be the key level to watch right now, the 76.22, 76.25 zone. Above 76.25 could be rather bullish here heading forward. So we'll continue to watch that level. All right, now let's take a look here at crude oil. Crude oil continues to go higher. I've mentioned before that this is the sloppiest up move that I can remember crude having in quite a while. It's very jerky, it's very back and forth, but overall it continues to shift value higher day over day, and that's what's very important. 71s here was violated and eventually held those gains. The previous session was a failed new low and price popping up a little bit. Again, this is not the prettiest up move, but price continues to push higher. We are at the 72.30 level and continue to hold around that zone, and I believe that there is heavy resistance in this area that ties into market structure, ties into the key range as well. And so again, that's another level that's proving to be resistance, just like all the others, but at the same time price continues to hang around that zone, which suggests that at some point we may see a continuation. So again, the pivot here is 72.30, and above that level, acceptance above it opens up a move back toward recent highs between 75 and 75.27. Failure to really see acceptance above 72.31 could open up a return as deep as the midpoint here of the key range, which would be 69.34. All right, let's take a look now at gold. Here it is. I mentioned before that gold could be on the verge of a significant expansion phase. We've compressed now significantly here. The 20-day reading is very, very compressed. And again, after a Fed meeting like this, you usually see a breakout attempt. And if that first attempt is successful, you may see significant expansion in that direction. If that first attempt is rejected, you may see a major expansive phase in the opposite direction. Obviously, right now we are at the lower edge of this range, and so 1190 is where I'm calling as a breakout attempt. So breaking down below 1190, getting say to 1185, that's going to be a real test here, because once that happens, does by the end of the day, are we back above the 1195s showing rejection? Or are we closing down near 1180, 1182, in which case we could be looking at a significant continuation lower. So that's really what I'll be looking for here in gold. It's hard to tell overall when you have a compression, because it can theoretically break in either direction. But we do know that the overall trend is down. Metals have been beaten up hard, and 1190, after bulls have been failed to get paid over and over again, I think 1190 is at risk of seeing a long liquidation downward. All right, that is it for now. I do have some exciting news here. If you go to PivotBoss.com, you will see that Swing Trade Pro 2.0 has officially arrived. That's right, Swing Trade Pro 2.0 has officially launched. There's a special offer that ends October 7th. You can click on learn more about STP here, and it'll take you to a page where you can learn more about Swing Trade Pro, the 5-step swing trading blueprint, and the various components to it. There's also a bonus attached to it, which is a 5-day live trading event that will be included at no extra value. And again, there are various levels here depending on if you were a prior member of STP 1.0. If not, you still can participate in the flash sale until the regular pricing comes online October 8th. So October 7th is the deadline for all of these goodies here. Come to Swing Trade Pro 2. So that is the link here, pivotboss.com/Swing Trade Pro 2. And you can learn more about Swing Trade Pro, the highly anticipated follow-up to the original Swing Trade Pro, which is still perhaps the most popular and most powerful, succinct swing trading course that I've ever put out. That is, until Swing Trade Pro 2.0 has arrived. This is an order of magnitude beyond the original, and I look forward to hearing your feedback for it. So please give it a look. One last thing, it is 100% money back guarantee for 30 days. So this is a completely risk-free offer right off the bat. It is a break-even trade. So that is always my favorite type of offer. Again, please check it out. Let me know what you think. Have a fantastic rest of your day, and I will see you all in the trading room.